Take a look at ENIL and the kind of earnings that it delivered. You had the top line growth which came in higher this quarter. The profit growth though was down about 41%. Let's get in more clarity. What's the way forward for the company? Prashant Pandey, MD and CEO of ENIL, as well as N. Subramanian, the Group CFO, both join in live in our studios. Thank you so much, gentlemen, for being with us. Prashant, let's start off by breaking it down for us in terms of the top line growth. What were the volume yields and what was the kind of ad growth that you clocked in?
Well, this quarter was actually a pretty strong quarter considering the huge impact of demonetization that was seen all across the media industry. Our core advertising business has grown at about 8%, but overall we've reported an 18.5% growth in operating revenue. And that basically is because of the huge thrust we got in the non-radio business or the non-core advertising business as a result of the focus that we put on it. The growth was fortunately led largely by a price increase, and supported, of course, by the political campaigns that happened in Uttar Pradesh in the last quarter. So that's what it was. And volumes is a conscious strategy that the company is following of rationalizing volumes and, in fact, reducing volumes. So that's the way the quarter went.
Okay, Mr. Subramanian, let's focus in on the margins. What's the outlook in the coming quarters? Do you think that we will continue to see margins at these levels, or there can be and there is scope for improvement?
So in this quarter and also this financial year, there were twin impacts. One was that we were rolling out our stations, and secondly is that the finance income also reduced. The impact of the batch one auctions and also the migration fee that we paid last year, that's there in the depreciation and amortization figure, which has gone up by about 16 crores for the full year and about 8 crores for the quarter. And also finance income has also come down sharply at a net level because of the borrowings that we did for the phase 3 expansion. So the margins are a bit dented because of these two factors, but that effect is temporary. But in the first half, we expect margins to be under pressure because, as you know, this is a high fixed cost business. We are rolling out number of stations. The batch 2 stations will also become operational during the current financial year. So their margins pressure will continue. And also there is a GST impact because of which we expect some sluggishness in the ad revenue for at least the end of this calendar year. While overall GST is a great reform and it will be positive for the company, we expect some negative impact in the first 9 months of the current fiscal.
Okay, glad that you're being candid with us when it comes to the ad revenue growth. Now, there's so much, you've dwelled so much on your expansion plan. So let's talk about the new frequencies, the latest auctions. What is lined up for ENIL?
Well, from the batch 1 auctions, we have almost executed the entire list of new cities that we've got. So there are just 3 small cities left from that first expansion, and we've made an entry into very important markets like Chandigarh, Cochin, Guwahati, etc. We've also, as part of the batch 1 auctions, launched our second frequencies all over the country. So we are now present in all the big cities with a second frequency. And the good news there, of course, is that we're doing exceedingly well in some of these new cities. Bangalore and Hyderabad, for instance, our Hindi channels are doing very well. We've emerged as leaders in the Hindi segment in both of these markets, both in listenership terms and also doing exceedingly well in revenue terms. Our impact in Chandigarh has been very strong, where we have overtaken the number 2 player there and have reached a number 2 level in listenership. So the growth in new markets has been very encouraging, and in fact new stations have contributed a fair amount to the growth that we've achieved this particular quarter. On the core business, the ad volumes as part of a conscious strategy that we are following, not only for FY18 but to be spread over the next 3 years, is of reducing ad inventory because we realize that listeners are now starting to complain about the volume of advertising in the industry, and ENIL as a leader has started a new movement in reducing ad inventory. So yes, there will be consequent price increases, and we expect that that will play out in the next 3 years.
Well, I think a lot of music lovers on radio are going to be pleased with that commentary. But Mr. Subramanian, I wanted to ask you about the activation business. What's the outlook over there, and what kind of growth levels would you envisage in that particular segment?
So, Prashant, you want to take that call?
Yeah, so, the non-radio business, as is commonly called, is actually to be seen as the solutions business that ENIL offers to its clients. And remember that the world has moved away from core advertising in television or print or radio or whatever towards solutions. And clients especially in economically challenged environments are demanding more solutions rather than buying specific media. So the company has got a bouquet of products in the form of solutions, and it's been a major emphasis for us over the last several years. Going forward as well, we expect the non-radio businesses to grow faster than the radio businesses, and the reason being that we believe that the world has changed forever and clients will demand more and more solutions. And that's what the thrust of the company is. The margins in the non-radio business have been under pressure, but that's largely because we've been introducing one new business after another every 2 or 3 years. But in the coming 3 to 5 years, we expect the margins to become healthy. And even if they don't reach the radio levels, they will become very healthy in absolute terms.
Okay, last and final question. I'll leave it open to whoever wants to answer. There was the music broadcast IPO as well. How does that change things, and what's in store for FY18 from ENIL?
So, essentially we will continue to focus on what we do in the company. I think the market will now have a comparable. So I don't think it's a pure comparable, because we do not just FCT, we do a whole host of other things, as Prashant mentioned earlier. So I think we are focused more on what we do in the company and how we improve our revenue growth, profitability growth, and we will let the market to decide what multiples to assign to the respective companies.